This is Matthew Cratter from Trader University, and today I want to talk about 8 countries that currently do not tax Bitcoin gains or capital gains. If you're interested in learning how to make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. And I should start by saying that none of this is intended as tax advice or investment advice, so be sure to consult with a professional before making any moves. So I'm always getting this question, what happens if the US bans Bitcoin, which I have addressed in other videos. It looks like the US is actually moving in the direction of regulation, etc. And that there's a very, very low probability that Bitcoin will be banned anytime soon. But as part of this question about what if the US bans Bitcoin, what if it just starts to treat Bitcoiners really badly, taxing them, trying to put them in jail, etc. Well, there's a very easy thought experiment. If one jurisdiction bans Bitcoin, treats Bitcoiners badly, or applies huge taxes to them, and then you have another jurisdiction or country that keeps Bitcoin legal and treats Bitcoiners well, in which direction do you think the brain drain and wealth drain happens? We've certainly seen this in the US, with countries like India and China, where we've had this huge brain drain out of those countries into the US, and it has really benefited the US in particular places like Silicon Valley. So this isn't just a theoretical exercise, but I want to look right now at a few countries where Bitcoin is not taxed. In other words, where your gains on Bitcoin, if you hold it as an individual for more than 1 year, is not taxed. The first one actually surprised me. I wasn't aware that Bitcoin is currently not taxed in Germany. I tend to view the EU as being, as an American at least, I tend to view it as being rather oppressive and bureaucratic, etc. So I did find this surprising and very, very pleasant that Bitcoin is not, and it looks like any cryptocurrencies are not taxed in Germany if you hold them for more than 1 year. Then there's another country in the EU, Malta. Lots of people like to call Malta now the blockchain island, which I think is kind of cool. Does not tax long-held digital currencies, either under the VAT tax regime or under capital gains. But if you are day trading, you can be taxed up to 35%. It looks like. So that'd be Germany, Malta. Portugal is another interesting one, where there's currently no tax on long-term holdings of Bitcoin, and it's also free from VAT as well. Portugal, I've never been there, but it looks like a beautiful country and does have the advantage of maybe slightly warmer weather than some of these other countries. Belarus, here's another one. Seems to be politically somewhat unstable at this point. This is always the trade-off. But as the U.S. becomes increasingly unstable, then the contrast between the U.S. and some of these countries may narrow to some extent. And so this is always an area I'm keeping an eye on. I currently have no plans to leave the U.S. I really like Colorado. This is where I was born. And but always keeping an eye on regulatory and tax developments. And I think you should too, no matter where you live. Belarus, very liberal approach to Bitcoin, completely tax-free, at least until 2023. So this is another thing to keep an eye on. If they change the law, you have to sort of plan ahead and try to front run and get out before they change it. As a lot of people know, Singapore is a very capitalist-friendly place. There's actually no capital gains tax in Singapore at all. So you can also you can go there and sell your stocks, etc. And as a result, there's no capital gains on long-term holdings of Bitcoin either. I am leaving out the part of how difficult or easy it is to actually move to any of these countries. It's not something I'm an expert in, though we will talk about the Cayman Islands in a minute. A neighbor of Singapore, Malaysia, currently no capital gains taxes in Malaysia, either on stocks or on cryptocurrencies. There is some talk that they may change the law on this. Definitely something to look into if you're thinking of moving to Malaysia. Cayman Islands, as many people know, is very, very tax friendly. There's no income tax. There's no corporate tax, no capital gains tax, etc., including no capital gains tax on Bitcoin and other cryptocurrencies. And you need to actually have become a citizen there for It looks like you have to have lived there for 5 years. There are probably lots of small rules that you need to pay attention to here. But if you can get citizenship there, you first apply for permanent residency, and after 5 years, I think you can be treated under the same regime as citizens and pay zero tax. I'll link to this article from Nomad Capitalist. It looks quite interesting. And Hong Kong. Hong Kong is another one. I sort of put this in the category of Belarus becoming increasingly unstable. It's still unclear the relationship between the U.S. and Hong Kong and China, and how that's actually going to work out in the next few years, much less in 20 years. But for now, it is not taxable. Crypto held as an investment. If digital assets are bought for long-term investment purposes, any profits from disposal would not be chargeable to profits tax. Obviously, you have to decide about the political stability of all of these countries when making a decision. Then there's another calculation as well. The U.S. is very good at taxing people. They like to tax you when you're alive and you're working and productive. They like to tax you when you're dead if your estate's above a certain level. And they like to tax you also if you try to leave. So this is the famous exit tax. Again, I'm not a tax guy, but it's a little bit like an estate tax. And what they do is it really only applies to people above certain income and net worth levels, it would appear. So, for example, your personal net worth more than $2 million on the date of expatriation. And I think they divide this they examine each spouse separately as well. So that might mean that it could be even higher. They also look at your income, your average annual income for the previous 5 years. If it's more than $165,000 as of 2018, it's probably moved up a little bit. There's some inflation adjustment, even though the government says there's no inflation. But if you're above this personal net worth level or your sort of 5-year average tax liability level, then you fall into this category of covered expatriate. And you have to pay, it looks like you have to pay up to 23.8%, which is really, if you think about this is sort of the Obamacare tax, the 3.8% plus the 20% long-term cap gains rate. So that's probably how they calculate it. What you basically do is you pretend that you sold all of your assets, including your stocks, your Bitcoin, etc., as if you pretend that you sold them the day before you leave the country, even though you don't really sell them, and then you pay the tax based on that amount. It looks like that amount just on the asset amount, or maybe on the capital gains amount. Again, consult a tax advisor. So this is a little bit disturbing. You know that you're not running the freest system when you have to put walls up against people leaving. I guess people got upset when Eduardo Saverin made a lot of money in Facebook and then left for Singapore. But I think I am one who would like to see jurisdictions and regimes compete for productive people, compete for capital, etc. And so I think to the extent that Bitcoin's very mobile and that there are countries that are very friendly towards it. Right now in the U.S., as I understand it, Bitcoin is just taxed either at the short-term capital gains rate, which is close to your income tax level, your marginal tax level, or as a long-term cap gains, either 15% or 20%, depending on the amount of gains you have, and then possibly plus that 3.8%. That's my understanding. Again, consult with a tax advisor. I would say when it comes to taxes, I would agree with American HODL on this one at least. If this is pretty funny, if the U.S. government spent all my tax money on NASA, you'd never hear a peep out of me about paying taxes. I prefer if they spent it just directly on SpaceX, but I'd happily let them steal my money as long as we had a base on Mars. And this has been one of the problems where taxes and the whole government bureaucracy have grown. I guess marginal tax rates have actually fallen over the last 30 years, but the U.S. seems less and less able to innovate at the scientific level, to innovate at the level of space travel as well. And yet there's more and more. If you look at the tax receipts and you look at the amount of debt that's being issued to fund government spending, it's a little bit discouraging. I think that's one of the things about competition. It's good to have competition not just between companies, but also between countries. And there should be a way of exiting the system as a way of protesting. If you're completely locked in, it creates less innovation. This is one of the reasons the US became the way it was, at least in the early days. A lot of people seeking an exit, and then even within the US, people moving from the East Coast to the West Coast, seeking a little more land, a little more space, a little more freedom, a little more distance from Washington, D.C. And I think this is what motivates a lot of people, like Elon Musk, for example, and space travel, just making sure that there always is sort of an exit opportunity. There's an exit door if you want it. It doesn't mean you need to use it. But that's one reason I'm very interested in looking at different tax regimes and Bitcoin, just keeping my eye on this. And I hope the U.S. government does the right thing and doesn't smother this nascent industry. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below, especially if they're countries that you've been looking at that are very friendly to Bitcoiners. Thanks a lot for listening, and I'll see you in the next video.